Hi YouTubers, welcome to my channel. I am Friday Trace. Today is in line with our continuation on our analysis on Bitcoin that I'm actually going to be analyzing Bitcoin for you. We'll actually be looking at Bitcoin on a weekly basis. Where are we actually going to be seeing Bitcoin in this week we are entering? Recall that I I normally come out almost every time to give you analysis on what will actually be happening on Bitcoin and other cryptocurrency pairs and the forex market. My YouTube channel, hit the notification button so that whenever I post a new video, you see you'll be notified, and then you will watch the video and have the best information you actually need to succeed in the financial markets. We all have the same vision. Our vision is to thrive and succeed and be free from financial stress, and that is what every one of us is working towards actualizing. Some of us who have been in this game for some time, not that you actually get everything you want at a particular time. It's going to be gradually, just a gradual process. You get it. So let's go. I'll be analyzing Bitcoin, looking at Bitcoin from the weekly. I'll be giving you this week in focus on Bitcoin, what to actually be aiming at, what to actually be looking at on Bitcoin. You see, this is just something that happens every time. I'll analyze this chart from the daily, then I'll go down. Briefly, let me give you the fundamental analysis on what is happening to Bitcoin and all that. You see, once you understand the chart, once you understand what the chart is actually saying, you will find it very, very easy. It will be very, very easy for you. Every other thing will fall in shape. When you get the charts, you begin to hear news that this institution did this. Recently, there is something that the German government sold billions of Bitcoin in their reserve. The German reserve sold millions of Bitcoin worth billions of dollars. They sold it, which is still in line. Whenever you understand the chart, a lot of things will be coming into play. FOMO, greed, other factors will be coming to play, and those things will facilitate the chart. It will still help the chart to go where the market is going. So once all you need to know is to understand the chart, understand what the technical analysis is saying, then the fundamentals will help you in having an overall bias of the page to add more value to what you actually know about the chart. So for instance, when last week I was actually telling you that we have a double bottom here, and whenever we have a double top, whenever you have a double top in the market, the same thing happens every time. Whenever you have a double top in the market, it will go and hit the next order block that is down. It's the same thing. There are arrays. There are arrays that the market moves on. There are arrays that we call them premium and discount arrays, PD arrays. Those arrays are what the market is booked on. I recall that I told you that there are algorithms that actually controls the financial markets. And once you know these things, you don't have anything. You don't have any, once you know how these algorithms book the market, you don't have anything to fear. You just follow the market very gently and you'll be okay. So let's go into the charts and analyze it. Recall that I marked this particular place. I was telling you that between 47, 45, and 42, that's where the markets will be reversing. All these things you are seeing here, it's just mere pullback, just retracement on the in the market, just mere retracement. Nothing has actually changed. Our bearish bias is still effective. Nothing has actually changed in the market. The only thing is that the market retraces, it moves and retraces. And if you even watch this market, this chart effectively, you see that there are the selling pressure is actually on the downside. You see that the downward candles are more bigger. That is to show you that the market is pushing down. If you know some of these things, you will find it very, very easy to understand the chart. Now, I was explaining to you, I said that I was explaining to you, I actually said that when the market moves up, that the moment this market move up here, I actually knew that we have a double top. And whenever you have a double top, which is an M pattern, whenever you have an M pattern, is the other shoulder line that actually decide where the market goes. The only thing you need to do is to mark from here, the body, mark from here up to this place, and then do a standard deviation of 1. Once you do a standard deviation of 1, it will hit you to this range. That was why I was telling you that, look, that the market is coming down, that nothing will make Bitcoin not to come down. Bitcoin will come down. It's when Bitcoin comes to this particular area that you have something like this. You have a pullback. Once you have that pullback, then it will give you this. Then you begin. That is when the main bull run in the crypto market will come in. That is when the main bull run will start. That is when you have Bitcoin hit 100, 120, 110, $80,000, $82,000 are marked here. That is when Bitcoin will hit $82,000. Then the first bull run, it will come in again. Then it will retrace into this particular range again. It will retrace to where? It will retrace and touch this double top that is the other side. It will retrace and hit at the top of the double top. Once it hit the top of it, will hold again. You have a mitigation, and you begin to have those arrays will begin to play in. So let's go into the chart and begin to analyze effectively. Now, whenever the market is moving, there are arrays, there are indicators, there are footprints that the market moves on. Until you have those footprints, you have them complete. It's a circle. Until you have those footprints complete, that's when the market either reverses or starts another trend. Either reverses by going up, then as it is going up, it is producing the same arrays. So you need to understand those arrays. Once you understand those arrays will help you to know when you are in an overbought position or when you have an oversold position. There are some things that are beyond the scope of this class that you actually need to join my inner circle. When you join my inner class, the moment you join my inner class, I will have a one-on-one chat with you. I will be teaching you on daily basis and be able to open your eyes to some of these realities, some of these things that happen in the financial market. There is nothing, many people will tell you that the financial market is scam. Bro, this is not scam. This is real. This is real shit that we do here. The only thing is that you are blind. You don't understand how the market is built, how the market runs. Until you understand this thing, you begin to see that many things come into play in the financial market. Those who rush this market come in with greed, come in with higher expectations. They come in looking at, like, come in with lots of their burdens on their neckline. Just come in maybe you are owing somebody, you have a burden, a load, you have loads of debts on your neck, and you come in and you have that intention. Yes, you can actually sort out your bills from this. That's not, I can't debate it. You can actually sort out your bills, but then your thinking, the way you understand, the way you come with that high expectation and expect that very soon you just come over. No, it has to be a gradual process. You have to pay that price. You have to pay the price. There is a price that every one of us paid in order to learn this. You have to pay the price, understand how this thing runs. Then you'll be able to, if you're able to learn this thing, it will give you freedom. But then you need to dedicate your time to it. You need to learn it. You need to like have have it, give it 90% of your time, 60% of your time. That way you can learn it effectively. So let's go into the charts and I'll explain this thing to you. I'm going to be dropping my WhatsApp number below this video in case you want to be part of my mentorship program. Just few dollars and you are in my inner circle. I'll hold your hand, teach you how the market is booked, teach you everything you need to know in the financial market. I'm going to be dropping my WhatsApp number below, so you chat me on WhatsApp and join my inner circle. Let's go into the chart. Now, this is the major thing. When this market was actually moving, these are the areas that you begin to look at. These are the areas that you are supposed to be looking at. This is it. you mark this, the market is going to reverse and touch this place. It is certain, it doesn't change. That's how it is booked. The market will say reverse again and touch this particular range. It is like that, this particular range. Until this is where, if the market reverses, this is where it is coming to. There are some things that I may not be able to teach you here until you are part of my inner circle. These are the things that the market books on. There are measuring indicators. There are indicators we actually use in measuring the market, measuring where the market goes, measuring how the market is booked. Now, whenever the market wants to move, whenever the market is moving, it produces arrays. Let me just give you a glance of what I'm actually saying. This is a measuring gap. This place is called this particular. You see that this range and this range, you have a gap. These three candles, 1 2 3, you have a gap that this one came into this place, dropped a wick, this one just smashed down, then this third candle came up, fell to close. So between these three candles you have a gap in between them. This is called a measuring gap. This is called a measuring gap. Briefly, let me open your eyes to this. This is called a measuring gap. Let me mark it. Let me fill it with blue. Let me use blue to fill in it. This is called a measuring gap. If you measure from here, if you measure from here up to this point, take it down, that is where the market is going. It will still boil down to this particular range. It doesn't change. This is the middle of the gap. The moment this market is going, the moment Bitcoin started producing these arrays and I see this thing, I know that it has dropped half of its movement. It is going down. Nothing can stop it. This is just a retracement. As this market is retracing, let me briefly, let me shock you. Let me tell you something that will make your will make you look gaga. Now, if you take this particular range, if you take this, believe me, Bitcoin will not go above this. Bitcoin will not go above this particular range. Bitcoin will. This is the only place we are targeting Bitcoin at on this weekly basis. It will not hit above this particular line that I marked here. This is a fair value gap. There is a gap here, but there are these fair value gaps have name. We have different names. The fair value gaps, they have different names. There are breakaway gaps. There are measuring gaps. After the breakaway gap, you have a measuring gap. I'm explaining the arrays, how the market is moved for you. The arrays that move the market. After the breakaway gap, you have a measuring gap. Recall that I told you that the measuring gap is half of the entire range. If you take the distance from the measuring gap, this gap now, if you take the distance, come up to and take it down to this particular place, it will give you this. This is where Bitcoin is going to reverse. Nothing on earth will stop it. This is how the market is booked. After the measuring gap, you have another block. After another block, what again? After another block, you have an exhaustion movement that produces three candles. Three candles. Three candles. After the other block, you have after the breakaway gap, you have a measuring gap. After the measuring gap, you have you after the measuring gap, which is here. After the measuring gap, you have another block. Another block. This is another block. This is another block. We are expecting this thing to push down, hit here, then return to this particular place again. Once it returns to this, the other block has completed. Then what again do you have? We are expecting an exhaustion. The market will exhaust with speed, with precision. It will come down to this place. Once it comes down to this place, we have achieved our first market precision prediction. Then we begin to look, what are you going to see in this place? It's not going to, once Bitcoin reaches to this particular place, this is a CB, this is a BC, this is a buy side imbalance, sell side inefficiency. BC, buy side imbalance, sell side inefficiency. The market becomes inefficient. When you say that something is inefficient, it means that thing is not it has not never been delivered at equilibrium. So it has to come down. It has to come down. And when this market comes down to this particular place, recall that I taught you some time ago, I taught you about trading range. You have a range. What is a trading range? A trading range is a new low or a new high that created a new low or a new high that caused a break of structure. This is the structure. This was the market was consolidating in this place. The market had to pull down, mitigate this whole stop loss, and then came down. This is the new range. From here to here is the new trading range. Recall that I taught you about premium and discount areas. Premium and discount, that is when the market is above 50%, is at premium. When it is below 50%, it's at discount. Taking this market in view now, where the crypto market, where Bitcoin is now, you look at this market. What are you going to look at when the market is here? Whenever the market is, you see that this market at this particular range, this thing is holding it. This thing is still at a higher range. You are not supposed to buy this market here. If you are buying this market here, it means you are buying it at the premium stage, and you are not supposed to buy anything when it is cost. You are supposed to buy low and sell higher. That is the principle of selling. So this particular range, you have this, you have this. This market broke this, offer liquidity, it broke it, is still to the down, is still to the downward. Now you have this whole money that people are locked here. You have this, it is locked already. Nothing will make Bitcoin to go up for now. It is going down, bro. There are some things that I'm saying in this particular place that I can't actually explain those things to you. But if you want to have an extensive knowledge of what the financial market is saying, I'm going to be dropping my WhatsApp number below this video. Click on that WhatsApp number, chat me on WhatsApp. I'm going to be where you join my inner circle, where I hold your hand and teach you everything that happens in the financial market, from the technical analysis down to the fundamental analysis, down to the secret of how the algorithm books the market, the macros that actually control the global financial market. I'm going to be teaching you those things in detail. So hit me up. Don't forget to subscribe to my YouTube channel as well. Subscribe, hit the notification button so that whenever I post a new video, you will be alerted, and then you follow up, learn, have the knowledge you actually need to succeed in the financial market. Now let's go back into the chart. This is on a daily. I am just giving you the overall. With this daily chart, you actually know where the market is heading, and know that you have a fair value gap here, and this is the fair value gap. That is where the market is targeting. It's just the fair value gap that the market is targeting. Meanwhile, there are areas that you have here that the market, that will hold the market. Once Bitcoin comes and hits 60.824, just be watching it. You see that the market will start going down. Let's watch. Overall, when you look at this, you know that you have a fair value gap here. This market is not supposed to break this fair value. If it breaks this fair value gap, you understand that the trend has actually changed. But for now, our bias is still bearish. Now, that is the bigger picture, like we're looking at it from the daily. Let's take it down to 4 hours. This is it. This is the 4 hours range. Recall that this same thing, it is just the same thing that the market does every day. These same things, they happen every day. I told you that the market does some arrays, that it does those arrays gradually. It produces those arrays, and those arrays, once you understand them, you'll be free from all this stress, be free from lack and all that. If you take this and measure from here to here and block it down, you measure it down, you see that it is still the same range. It's still the same thing all through. Measure from here up to here where the market mitigated. Now come take it down. You see that it will take you down to this place. This particular thing is a measuring gap. This is the measuring gap. This is the measuring gap, which is halfway. If you take this and take this, take it up, you come down. It is just the measuring gap. This particular thing, this is just the measuring gap. That is why I marked this place for you. It's a measuring gap, bro. This is a breakaway gap. That is why you saw that blue line there. There are some things I may not be able to explain to you here, but you need to know them. This is an order block. This is the 3 candles that I told you of. I told you that after the order block, what do you see? You see 3 candles, exhaustion candles, 3. This is another block. This is another block. This is a breakaway gap. This is a measuring gap. This is another block. This is 1, 2, 3. As if I know these things. Those are exhaustion candles. Whenever the market breaks the exhaustion candle, this is it. There is a change of structure. There's a change of structure. The change of character, we call it cough. In trading, we call it cough, change of character. When you are dealing with somebody and eventually the person begins to go the other way, you know you are not in the same direction with the person again. This is how the market books. But you need to be observant. You need to remove every distraction on your head. You need to focus on this, because each one of us need money. Each one of us need to be free from financial burdens. We need to be free from stress. We need to be free from environmental wants. So for you to be free, and for you as somebody who thinks that you want to have this skill set, because this is the skill set that will keep you free from inflation. This is the skill set that every one of us actually need to acquire. When you acquire this skill set, it will give you the leverage, it will give you the freedom to explore, to troubleshoot, to begin to interrogate yourself, interrogate the environment you live in. Look at the things you actually need for life. Be able to filter those things that are good for you and those things that, if you don't have money, you don't have option, bro. If you don't have money, you don't have option. That is just the reality of it all. There is no two ways about it. If you don't have money, you don't have option. The only thing that sets you free, the only thing that make you to begin to make choice, to decide on this and that is when you are free. And for you to be free is to have a particular skill set that makes you free from inflation, makes you free when you have your time. When you have your time, if you have your time, you'll be able to dictate what is good for you, when you are supposed to do certain things and when you are not. But if your time, if somebody is offering you a paycheck at the end of the month, maybe you are working for somebody, you know that as a matter of fact, what you do is to give the person your time, and the person in reverse gives you money, pays you for offering him or her your time, which is the paycheck you receive at the end of every month. So you give your time in exchange for money. That is the psychology. But when you have your time, when you have your freedom, you'll be able to think down, to look down, sit down constructively, ask yourself certain questions, those things that you're supposed to do, those things, begin to look at yourself in the real sense, then ask yourself the things you are supposed to do, why God created you on earth. Look at those things and look at your talent and be able to pursue it. And that's the point you succeed. So let's go into the charts. Let's continue. Now you have this. The market keeps producing this. This is an M pattern. Whenever you have a liquidity like this, whenever the market offers you liquidity like this, whenever you have a liquidity, I told you that there is something we call cough, change of character in the market. A change of character occurs when a particular high is broken. You know that in the retail world, they tell you that when you begin to have higher highs and higher lows, that is when you begin to have higher highs and higher lows, that's uptrend. And when you are having lower lows and lower highs, that is a downward trend. Now, at this point, this is it. This is the middle range. This was the previous high that caused this break of structure, which is an exhaustion phase of the market. I've explained these things. Now, when you have this, what is the same thing? It is the same psychology or two. If you take this in and divide it into two, it will give you here, which is 50%. That is why the market returned to this place. There are some things I may not be able to explain in this chart because those things are beyond the scope of this particular class. But I'll try my best. Whichever way I can do it, just to explain it to you. Look at how this candle is respecting this middle range here. This is the middle. This is the half of this from here to here. You take it, divide it into two, it will give you this. If you take this, you divide it into two, it will give you this. Look at how this candle respected this one, this candle. Look at how it respected it. Look at how this particular one respected the 50% of this particular range from here to there. Because this is the new range you are dealing with from here to here. Because this is the structure, this is the structure, the range. This is the low that caused the break of structure. You get it? So you divide it into two. It is telling you the moment the markets return to 50%, they are telling you that they are interested in the upper liquidity. Meanwhile, you have double top here. Meanwhile, you have double top here. This is double top. You have this as double top. Now, this is liquidity. And I told you that there are only two things that the market makers does in the financial markets. They offer, it's either the market makers they are offering liquidity, or they are liquidating the one they are offered already. So looking at it from that principle, you see that they offered liquidity here. They offered liquidity here. This is the same thing that is happening. This is the same thing that is happening on the other side of the chart. It's the same thing I explained to you on the bigger perspective. I told you that whenever you have this and have this, it will come down. This is just it. From here to here, it will take it down. That is why the market returned to this particular place. The moment you begin to see this, the moment you begin to see for sale, they are actually indicating to you that they are interested in this upper liquidity. That is the psychology. That is why I marked out this particular place. I told you that if you take this particular fair value gap, you divide it into two. If you divide the fair value gap into two, this is what you have. This is what you have, bro. This is the same thing that the market does. It doesn't change. It doesn't change because the market, the people who design the financial market, these are global body. They are not interested in you knowing what is happening. They are interested in how they manage inflation, how they manage inflation, how the Fed will actually control the global economy. And let me tell you something about the Federal Reserve, about interest rates and about interest rates. Like, if, for instance, let me tell you why Bitcoin is actually going to move massively when we are expecting this new boom by September, because the Fed is actually looking at, they want to cut down interest rates, and when they cut down interest rate, what will happen when there is a hike in interest rate? People begin to, there is no way you actually go and get a loan, maybe from your credit card. You go and get a loan, a higher loan, a loan that is very very high. When you get the loan, then you come and invest it into a high risk asset like crypto. Who does that? Nobody does that. People begin, because the interest rate at which they are offered this loan is high. People will not, they begin to move their assets into bonds and their futures and all that. They will not they will begin to move it into lower risk assets. That is the psychology. But when the Fed cuts down on interest rate, that is why each time the Fed cuts down on interest rate, the crypto market will boom, because people will begin to move, because the interest rate is low. People will begin to move this. People will begin to move these assets. People will begin to move their money into lower risk assets. That is why you see that whenever the Fed cuts down on interest rate, the crypto market will move, because the people are looking at it that, okay, the interest rate they're offering is this low, and they can move it into higher risk assets. That's the psychology. So coming to this particular place where I'm telling you to look at this fair value gap and divide it into two. If you divide it into two, you have this. This is where we'll actually be looking at. When Bitcoin hits this particular place, you see what will happen. You see what, and if you take this and divide it into two, it will take you to this particular point. That is the point, which is 50%. This is the point, 50% of this range. This is where Bitcoin will actually come to. When we come to this particular point, we begin to look at what is the market saying. What is the market saying? If you look at, if you also look at this, this is the point that the market manipulated. This is the point. This is called Asian range. This is called an Asian range. This particular point is called an Asian range because when the during the Asian session, during the Asian session, the markets, the currency that are not in the Asian currency, that those pairs that are not traded in the Asian world, they will be accumulating, they will not be moving because there won't be much money to move the market. People will not be trading it on the stock exchange. The New York Stock Exchange will be mute at that time. People will be sleeping then during because of the time difference. Then the London stock market will also be mute. People will not be trading at that. So anything GBP, USD, anything that has GBP, USD in it will not be moving to be consolidating. At that range, anything that has like Chinese yuan, anything that has all those Asian currencies, they will be moving at that particular time because they will be traded, their stock exchange, business activities will be on, they will be trading at that stage. So just understand it. Now you have this Asian range. The market consolidated at this particular Asian, this is the Asian range there. Now you have this. They only wanted to people to play into their hands. They only wanted, then you have liquidity one, you have liquidity here, you have a double top, still the same principle. You have a double top here, you have this is liquidity, this is liquidity, and this is liquidity. Now recall that I told you that the market only does two things: it offers liquidity, or it mitigated the liquidity offered. This is the middle of it, this is the middle of the range. So when the market came to this particular spot, it offered this and came and mitigated this one, came down to this M. So you have M here and it has offered, this is internal liquidity and it has mitigated it. What will happen next? It will move into two ranges. That is what the market does. It will move. Where is it going to? It came to this fair value gap. When it came to this particular fair value gap, what happened? The market makers, they have turned the day for the day. They have condemned, they have cannibalized this particular people who put their stop loss above there and thought that the market is now going up, that this place will become resistance. But in the eyes of the market makers, they only allow you, they only manipulate you for you to put your liquidity. So they came and manipulated them. What will happen again? You divide into two again, divide here into two. This particular place becomes, anything happening within this particular place comes, anything it comes, anything it comes, anything it comes, anything it comes, anything above 50 becomes premium, anything below 50 becomes discount. That is why the market will be coming to this particular place. That is why we are expecting Bitcoin. If we eventually get Bitcoin to this particular place, it's okay. We are still bearish. The market is still bearish until you have a change of structure. When the market breaks this particular range and holds on top of it, that is when your bearish bias begin. When you have this a change of structure, when it breaks and holds, fails to break down, that is when you know that you have a change of character. But for now, we are still bearish. This is just a pull back. So guys, you can actually subscribe to my channel, hit the notification button so that whenever I post a new video, you see it. We keep analyzing this market on daily basis. You see this particular thing, just the same thing that is happening again. They are trying to tell you that they are interested in the upper side of this market, bro. They are trying to tell you that they are interested in the upper side of this market until this market will break this particular range. That is when you have this, still those arrays. This is a measuring gap here. This is a measuring gap. If you want to know where this market is going, you take here and measure from here to here. It has offered liquidity this particular place. You measure from here to here, you take it up, it will still bring it here. You measure the gap from here to here. That's how we do this. That's how we do this on daily basis. You can't do this above this. This is the only thing, this is the only skill set you need. This is what you need to succeed in the financial market. These are the secrets. These are the secrets. These are the secret things you need to know. This is where the market is going. When Bitcoin hits this particular range, let's watch and see. Once it hits this particular range, we have an order block now. We have a breakaway gap here. We had a breakaway gap here. The market held. We had a breakaway gap here. The market held. The market consolidated. You have two consolidations. The market consolidated. You have another block. This is another block. This is another block. That's how the market is booked. This is another block. This is another block. This is another block. That's how the market is booked. So we are expecting an exhaustion, a 3 candle straight move to exhaust to hit this particular range. That's what we are looking at. Now, looking at this market from this range, this is what you have. This is what we have. The market is chaining itself. It is telling you that there is nothing. You see this, look at this particular red candle. If you take 50% of this red candle, if you divide the candle into two, if you divide this candle into two, whenever the market, even if it breaks this particular thing with wick, no problem. But whenever the body of this candle takes away this, whenever the body of any candle that comes down, takes away this particular range, you know that the trend has changed to a downward trend. Whenever it breaks this particular red candle, that is when you, but as far as it doesn't break it, even if it breaks it and breaks it with wick, it's not, but it shouldn't break it with body. That is when the trend, you know that the trend has actually changed. Guys, I think this will be the end of this particular class. I've actually done my best for today. So watch Bitcoin, watch what will happen in the crypto world, watch what the market says, watch what happens in the global market. Don't forget to subscribe to my channel, hit the notification button so that whenever I post a new video, you will actually be notified. Guys, this is just the little I can offer you. This is a free class. If you want to have an in-depth analysis, in-depth knowledge of what is happening in the financial markets, you hit me up and I'll be dropping my WhatsApp number below this video. Chat me on WhatsApp where I take you down and put you in my inner circle. The beauty as the best the most good aspect of it is that you will be able to interact with some of my students. I have students globally. I have students like in 6, 8, 10 countries in the world where I teach them, interact with them. You share ideas together. You share trading ideas together. You compete and learn from each other constructively. That way, you'll be molded into the kind of person you intend to be. Guys, one love. Love you all.